Okay, so I dah buat recording. Now I do the screen share. So we're going to finish up the chapter. All right, and we go by the book. Okay, we go through the book. I will just go through the rest of the things that we either have not covered or we touched a little bit. So firstly, go to the excess burden. Now, excess burden, as we know, it depends on two things. Number one, the tax rate. Okay. And then secondly, the change in Q. Apa pasal ni? Ni apa dia benda pula? Change in Q. Di mana nak pergi benda ni? Sorry. Okay. Now you boleh tengok everything okay? Can you hear me?
Yes.
Okay, good. So we look back into the excess burden. Excess burden, which is the triangle, the area. So if you recall, all right, excess burden is equal to what? Is equal to half the tax multiplied by delta Q. So here you have excess burden depending on two things. All right, number one, what? The tax or the tax rate. So as we can see here, the higher the tax, okay, if the tax is increased, that means excess burden will also increase. For example, tax increases from 150 to 340. So in other words, increase in the tax, that means the excess burden will increase. Because you get it from here. And of course, we draw the diagram last time. Secondly, delta Q. Now, delta Q is related to the excess burden. No, I'm sorry, to the elasticity of demand. So I'm not going to look at the relationship delta Q directly, okay? Because we know from the diagram, from here, what can we see? Delta Q, if the change in Q is smaller, then what about the excess burden? Excess burden will be smaller, all right? Excess burden will be reduced. Now, this delta Q, you can relate to the elasticity of demand. Now, if the change in Q is smaller, what about the price elasticity of demand? Will it be inelastic or elastic? So if the demand is more inelastic, that means the demand function is vertical, more steep, more elastic demand, then what happens? Then the delta Q is smaller. Okay, so we can deduce the smaller the delta Q, that means what? That means the demand is more elastic. So if the demand is more elastic, then what about the excess burden? Excess burden will be reduced. Okay, I think we did this in the diagram. If you recall, we draw the diagram. But here, what I'm doing, we get the deduction directly from the formula of excess burden, where the excess burden is equal to half T times delta Q. So T directly, you can say that the higher the T, excess burden will be increased. And here, lower delta Q, meaning the demand is more inelastic, excess burden will be reduced. Or you put it another way, what about if the demand is more elastic? So when the demand is more elastic, what about delta Q? Delta Q will be higher, all right? Delta Q will be higher, that means what? That means excess burden will be higher.
Bigger.
So that is the relationship. Elasticity, price elasticity of demand, and how it relates to the excess burden. So we're going to look at two factors, right? Number one, the tax rate directly. Secondly, the price elasticity of demand and how it affects the excess burden. That means if the demand is more elastic, the excess burden will be what? Will be higher, right? Okay, so that if you look at the book, it gives you a more detailed formula for the excess burden. So I'm not going to go through that. We just focus on the basic formula, but we are still be able to relate the tax and the elasticity to the excess burden. Okay, all right. Any question? So if you go back to the diagram, you can see the diagram which I draw earlier. Now the second part, the next one is the efficiency loss of a tax. Now, what is efficiency loss of a tax? So if you look at that book, they give you the formula. What is the formula? The formula is excess burden is equal to what? Excess burden, no excess burden. Efficiency loss is equal to the ratio of excess burden to the tax revenue. So that is on page 411. So next is the efficiency loss of a tax. Efficiency loss of a tax. All right, of a tax. Now that is that we denote by efficiency loss, EL. Okay, EL, efficiency loss of a tax equals what? Is equal to the excess burden divided by the tax revenue. This is excess burden divided by the tax revenue. So it's a ratio revenue. Now, example, let's say if your excess burden is equal to 5,000 and the tax revenue is equal to 20,000. So what is the efficiency loss of the tax? Equal to 5,000 over 20,000. Potong. Berapa dia? 5 over
1
20,
over
5
4.
over 20, 0. Berapa?
1 over 4.
1 over 4, 0.25. Is that right? 0.25.
Yes.
0.25. Now, what does it mean? It means that for a dollar, so efficiency loss is 0.25. What does it mean? It means that for a dollar or a RM tax revenue that the government collects, what is the excess burden? Excess burden is 25 cents, 0.25 RM. So I write 0.25 RM or 25 cents. So for every or for RM tax revenue that the government collects, excess burden is 25 cents. All right. So that is what we mean by the efficiency loss ratio. So what we can say here is for a given tax revenue, the higher the excess burden, all right, then what happened to the efficiency loss? Efficiency loss. It will be higher or be smaller? Be higher lah. Higher for a given tax revenue. Tax revenue doesn't change, right? But the EB is higher. So what about the ratio? Ratio higher?
Bigger.
Bigger. Or if you say the other way around, for a given tax revenue, if the excess burden is lower, then what about EL? EL will be also lower. Okay. So that is the meaning of the efficiency loss. In other words, the excess burden, or you can say here excess burden of a tax per RM collect, okay, or per RM raised. So that is efficiency loss. Okay. So what else? We just try to cover things that we are supposed to cover. So I just follow the book. Now next is the forward shifting, backward shifting. So that comes from the tax equivalence. So if you recall, what is tax equivalence? Tax equivalence meaning if the government impose the tax either on the firm or on the consumers, there is no difference the effect of the market. Okay, so we discussed that. You will see, the shift in the supply or the shift in the demand will be equivalent. The incidence of the tax on the firm will be the same as the incidence of the tax on the consumers. So from there, you have what we call backward shifting and forward shifting. So you just read that part. What is a forward shifting? It's just a concept. If the tax is imposed on whom? Is imposed on the sellers, then what happened? Then they will increase the price and shift the burden of the tax to the consumers. So that is called transfer of a burden of the tax from the sellers to the buyers. Okay, so that is forward shifting. Okay, in other words, the statutory incidence of the tax is on the firm. What the firm does, the firm increases the prices. So a portion, okay, at least some part of the incidence of the tax will be transferred to whom? Will be transferred to consumers. So we call it forward shifting. If the tax is imposed by the government on the consumers will reduce their demand. In other words, there will be what? There will be also reduction in the price the firms receive. So there will be what? There will be backward shifting. So backward shifting is just a term that describes the shift of the incidence of the tax, some portion of it, to either to another party, okay, from the party that is legally imposed. Okay, so that is on tax equivalence. So tax equivalence, you have backward shifting, forward shifting. All right, cool, good. So that is one. Okay. Another one is what we call the elasticity rule. Since elasticity can affect excess burden, so when you tax goods, when you tax goods more than one good, then we have what you call the elasticity rule of taxation. So here, we want to look at called a system of tax. So when you have a system of a tax, system of tax. In other words, here you tax more than one good, or service. How do you tax? All right. Now, the one rule is this: you tax by the elasticity rule. We call it inverse elasticity rule. Okay. Now, what is inverse elasticity rule? Now, when you want to, or inverse elasticity rule, that's rule number one. Number two, you broad base. Okay, broad base, broadening base, broadening the tax base. Now, when you do the tax system, what is the criteria? So the criteria is this. The criteria of the government is what? Is to minimize. Okay, minimize the total excess burden from the tax, from the tax system. So that is the objective. Now, this criteria is called the efficiency criteria. So what is the efficiency criteria of taxation? To minimize the total excess burden from the tax system. Or like I said, tax system meaning what? Meaning you tax more than one good. So let's consider two goods. Let's to make our life easier. Let's consider two goods. Now, when you consider two goods, you want to minimize the total excess burden of the tax system in such a way that what? The total excess burden from each of the good that you tax would be what? Would be minimized. Okay? Okay. Now let's consider two goods. Consider two goods, X, Y. Now, if you want to minimize the tax, or I'm sorry, not minimize the tax. You don't minimize the tax, okay? We minimize what? We minimize the total excess burden. So if you want to minimize the total excess burden, number one, the inverse elasticity rule, right? Under the inverse elasticity rule. So under the inverse elasticity of demand rule, to tax the two goods, X and Y, such that, okay, the condition would be here. The condition would be, or you tax X and Y, such that, okay, such that what? I got to move to another page. Okay, are you done? Finish? You got it? So the criteria is you want to minimize the total excess burden from the tax system. Now we are going to look at first rule. First rule. That means the inverse elasticity rule. So how do you tax under the inverse elasticity rule? Now the condition is this. You tax X and Y such that what? Such that delta X divided by X is equal to delta Y divided by Y. The change in Y change in x over x equal to the change in y over y. So this is equal to, if they write in terms of elasticity, right? If they write in terms of elasticity, what we get would be the relationship. Okay, look at the formula. The formula, you look at the book. Okay, in the book they give you the formula. I am looking at the formula right now. Mana formula? So you can write in terms of elasticity. Tadi ada, tadi masa saya when I was going through that thing, that's okay. In terms of elasticity, you tax on good X multiplied by the price elastic demand of the good X equal to the tax on Y divided, no, not divided, multiplied by the price elasticity of Y. Okay, so this is the tax on X multiplied by the price elasticity of demand of X. So equal to the tax on Y equal to what? Equal to the tax on Y multiplied by the price elasticity of demand for Y. That will be equal to, you rewrite elasticities on the other side, the tax rate on the other side. So what we get is this one. So the ratio of the tax, okay, how do you tax X and Y? You tax X and Y such that ratio of the tax on X equal to what? Equal ratio of the tax on X to the tax on Y equal to the ratio of what? Ratio of the price elasticity of demand, price elasticity of Y, or demand, to
On X.
the price elasticity of demand of X. So that is what you call the inverse elasticity rule. That is the inverse elasticity rule. Now, example. If you look at an example, we can get the idea better. For example, let's say the demand, the price elastic demand of Y is equal to negative. The price elastic demand for X is equal to -1. Now, here, which one is more elastic? Y or X? When you look at elasticity of demand, we know it's always negative. But when you want to look at the degree of elasticity, you disregard the negative sign, because as you know here, -1 is bigger than -3.
Oh,
So X is
why?
more elastic. Okay, but when you look at elasticity, the elasticity of demand is always negative. Okay, it's always negative. So the degree of elasticity, even if you want to describe it, you don't consider the negative sign. Just consider the absolute value. But when you describe, you must describe in terms of the opposite change, right? So in other words, here, this one is more elastic. Okay, Y is more elastic. So be careful here. Okay, when the demand, or when you're talking about the elasticity of demand, of course, it always has a negative number. But when you want to describe the degree of elasticity, just disregard the negative sign. Okay, that means Y here is more elastic. If you increase the price of Y by 1%, the demand will go down by 3%. That is the basic definition. The opposite movement of the price and quantity. Okay, right. So here Y is more elastic. Now, if you do that, that will be equal to what? Equal to -3 over -1. That is equal to 3. So the ratio of the tax on X to the ratio to the tax on Y is equal to 3. Now, what does it mean? In terms of the tax that you charge on X, the tax we charge on Y. Now, to make it so that we can see it clearer, at least to me, all right? So what you do, you bring the Y to the other side. So now I got what? Tx is equal to Ty. Okay, now how do you tax X relative to the tax on Y?
3 times.
3 times. So you tax X what? 3 times the tax on Y. So if the tax on Y is what? Is 150, then what is the tax on X? Will be 3 times 150. So berapa dapat? 450.
450.
450. So the tax on X will be 3 times higher than the tax on Y. Why? Because X is what? X is more inelastic. Okay? Elasticity on X is lower. So as the rule that we already know, okay, we know already, the more inelastic the demand,
The less price change.
and less price change, that means excess burden will be smaller. Okay, so now you're going to relate the excess burden to the tax. So you tax goods, okay, you tax goods with lower elasticity relatively higher than goods that have more or that have higher elasticity of demand. Why? Because in that way, the excess burden total, okay, total excess burden across all the goods will be smaller. Okay, any question? So you tax goods with inelastic demand relatively higher than the goods that have demand or goods that have higher elasticity of demand. Okay, any question? So this is the inverse elasticity rule. Okay, I'll give you another example. Another intuition, that relates to this one. So here, you've got X and Y. Which one is more inelastic?
X.
X again. X here is inelastic relatively. Okay, inelastic. The demand here more elastic. So under the efficiency rule, inverse elasticity rule, the tax on X should be higher. Okay, the tax on Y will be lower. So by doing that, the total excess burden, okay, will be less, will be lower. Because our objective is what? Objective is to minimize the total excess burden. Not just excess burden on the one good. We're talking about what? We're talking about more than one. So the rule is, the more inelastic demand, you tax higher. If the demand is more elastic, you tax lower. Okay, that is efficiency criteria. Okay, all right, any question? All right, good. Now, the second part, what do? You brought you broaden the base, broadening the tax base. Now, what is the tax base? Base, you have to look at chapter 10. Chapter 10, they define base. But base is simply the item or activity that is taxed. So activity or item that the government tax will be what? We call it base. So broadening of the tax base, meaning you tax more item. Okay, you tax more item, you broaden the base. In other words, let's say in the market, how many goods are there in the market? Okay. In the market, how many goods are there in the economy? Not in the market, in the economy. How many goods are there? Let's suppose you have berapa thousand, 100,000 goods and services. This is just a wild guess. In our country, I do not know, maybe more. Okay, let's say 100,000. Now, suppose initially the government taxed only 5,000 goods and service. Many goods are not taxed. Or let's say the government tax only on, soft drinks, tax on cigarettes, tax on, these are the tax that you, on the consumption of goods that we don't want, tax on liquor, and so many goods, let's say rice, tea, they are not taxed out of 100,000. So which one is better? You tax 5,000 goods or you tax 50,000 goods? Which one is better? Of course, this one better. Okay, broadening the base. So here is what you call broadening the base. You want to tax as many as possible. All right, so you want to tax as many as possible of the goods and services that is available in the economy, so that the government can raise more revenue. Okay, of course, raise more revenue, and also it can lower the excess burden. So when you tax, when you broaden the tax base, you tax more goods and services. What about the tax? Suppose you tax 5,000 goods. The government
spread out.
raise $5 million, 5 million ringgit. You tax only 5,000 goods. 5 million ni sikit sangat. 5 billion. Okay, 5 billion RM. You tax 5,000. And then you raise the same amount of revenue, 5 billion, and you tax 50,000. So what is the difference here?
More spread out.
One is more spread out. That is broadening the base. Okay. What else?
Each good, the tax is lower.
Good. It's good. If you broad the base, it's good. You can tax lower. Okay. So that is what you call broadening of the base. So broadening of the base, if you say to raise a certain revenue, okay, to raise a certain amount of revenue, that means the same revenue, by broadening the base, you can lower the tax for each of the goods. So this is another criteria. All right. So what we are talking about here is to raise. I think you can make the comparison if we raise a given tax revenue. It means the same amount of revenue. Say 5 billion RM tadi. All right. So what does it imply under the broadening base? By taxing more goods and services, what happened? We can reduce the total excess burden. Okay, and we can also reduce what? We can also charge lower tax on each good and service. So that is what you call apa tadi? Broadening the base. Okay, broadening the base. Okay, you get the idea?
Yes.
Okay, good. Example. All right, example. Now let's say I consider only two goods right now. Let's say we consider two goods, X and Y. Okay. Now let's say I have X and Y. This is X, that is Y. So I got QP here, QP. Suppose you have the demand be like that, demand like this, supply will be like that. Now, let's say the tax will be MC, MCT, here MC, MCT. You have the tax will be there, all right? So what is the excess burden? Excess burden will be this area. And if you look at this one, excess burden will be here. So this is excess burden. We just look at excess burden. Okay. Of course, you can look at the change in the price, but that is not our purpose here. I just look at excess burden. All right. So that is T. Now, suppose that T and this T here will be, will be about the same, and you raise a certain amount of revenue, say certain amount of revenue, okay, equal to something. Now, we want to argue that if you broaden the base, and then what we can do, we can lower the tax. Okay, you can lower the tax. By doing that, you lower the excess burden on each of the good. So now, I want you to do this. You add another good. Okay, another good. Y, X, Y, Z. So now you draw 3 diagrams. Okay, I draw only 2. You draw 3 diagrams. Just like what I'm doing, don't draw, very nice. Just sketch. You want to show the excess burden. You draw another good, you add another good. So now you have X, Y, Z. You make the tax smaller. All right? Tax on X smaller, tax on Y smaller. And also you introduce the good Z, also tax smaller. And then you look at the excess burden. The excess burden will be what? Will be lower. And we can still raise the same revenue. So what we want to show is by taxing more goods, you can tax lower on each of the goods, and the total excess burden will be less. Okay, all right. Okay, draw. Sketch a diagram. You add another good Z. Tak payahlah, tak ada masa. We have now 9:46. Okay, you don't have to do it. You add that, okay? But what homework? Okay, you do at home. I don't think we have time because I need to cover a little bit more. So we do later. Okay, you do at home. There is a name to that thing. Now the inverse elasticity rule, the ratio, okay, that relationship, the ratio that I mentioned here, you tax such that delta x over x is equal to delta y over y. There is a rule. I give the name of the rule here. This is what we call Ramsey rule. Under the name, his name is Ramsey. So he was the person who came up with this inverse elasticity rule. Okay, all right. But we don't really discuss about Ramsey rule because from the Ramsey rule we have the inverse elasticity rule. So our focus will be more on the inverse elasticity rule. Okay, all right. Okay, apa lagi? Elasticity rule, broad base rule. Okay, all right. Now, the implication of this efficiency criteria, okay, there is implication. If you look at the economy as a whole, what is the implication? Okay, there is implication. Okay. Now, if you look at the economy as a whole, you look at distribution of income. So now, implication of efficiency rule. Now, economy as a whole, you have what? You have distribution of income. Now, if you look at any country, not just developing country, so developed country, what is implication of a market economy in terms of income distribution? Not just market economy, Islamic economy macam tu juga. What about the distribution of income?
Equity.
No, equity. Yeah, equity. That is the point that I'm coming to. We are talking about distribution of income. What can we say about the distribution of income in an economy? Any economy. We are talking about US, Germany, or UK, Malaysia, India, what about
People
distribution of
who
income?
poor get more.
Distribution of income is very skewed. Is that right? Uneven distribution of income. Uneven distribution of income, or we can say skewed distribution of income. Some people, the top 20% control 80 maybe 70% of the income. The bottom 40% get only maybe 10% of the income. So you have very rich people and some very poor people. So that's how you have poverty. All right. Okay. Now, when you do the taxation under efficiency rule, what is the rule? What is one rule that we were talking about? You tax what? You tax the goods based on what?
Income.
No, you don't tax goods based on income. You tax income based on income. You tax the good, the price tax, the price tax, the consumption, the excise tax, the price tax. What is the basis of price tax? Based on the efficiency rule we just discussed just now. Based pada benda?
Elasticity.
Based on elasticity. Okay, the more inelastic the good, the higher the tax. Okay, now if you look back into the types of goods, what types of goods mostly are inelastic?
Ferrari.
Ferrari is not inelastic. What kind of good more the elasticity of demand is very inelastic.
Oh, inelastic.
Inelastic. Ferrari very
Rice.
elastic.
Rice. Rice.
Rice. Okay, the goods that is necessity. Okay, many goods necessities. Okay, their demand is inelastic, very low. Okay, lower, inelastic. In necessities meaning basic need. Okay, based on countries. For example, in our country, rice, flour, cooking oil, chicken. Chicken is not necessity. You don't eat chicken, okay, you can eat fish. Okay, if the fish is very expensive, we can go fishing. We can go fishing Sungai Pahang, banyak ikan lagi. Ataupun we can go to Kuala Selangor fishing Selat Melaka. But basic need, alright, basic needs. For example, rice. And of course, in other countries, for example, in India or in negeri mana, dia punya basic need is not rice. Any other country? Are you from
Turkey?
If you are not from
Bread.
Malaysia, what is the basic need food in your country? Some people wheat. Okay, some other country they have wheat, which is the basic necessity. And some necessities, the very low inelasticity is the one that you need, that you have to have. For example, medicine. Okay, certain kind of medicine. So if you are ill, certain sickness, you need to have the medicine. So the demand is inelastic. So if we talk about this, the relationship, the goods with inelastic demand, mostly necessities. And as we know, necessities for the lower income group, they spend higher percentage of their income on necessities. So for example, these top 20 people, they spend only 10% of their income on necessities. On the other hand, the bottom 40, they spend what? Maybe 80% of their income on necessities. Okay? So, what about if the government tax rice very high and tax sugar very high, flour very high, and the tax goods that is more elastic, let's say Ferrari, luxury boat, low. Okay, well, what happened?
B40 will spend 120% of their income.
You see, the B40 will be worse off. Now, when the B40 will be worse off, if you are the government, and the B40 made up of more than 50% of the voters. So what happens in the next election?
Lower tax on necessity.
So next election, I'm talking about election. What about in next election? Suppose Barisan National Government increase the tax on rice, on everything. What about the next election?
What other?
Habis lah dia. Okay, out you go. All right. So when you look at these things, we are not only looking at the efficiency rule. We are looking at another rule, which is what? Equity. If you tax necessity goods high, of course it's efficient because the demand is very inelastic. But is it equitable? Okay, is it equity means is it equitable? Is it equitable? Now, what is equity? Equity is a value loaded concept. All right, value loaded concept, and of course, this is based on the community, on our society, community-based values. Okay, and of course, it's not fair. Okay, it's a concept of what? It's concept of fairness. So it is not fair for us, any government, to tax, all right, some goods with inelastic demand highly. Why? Because they are necessities. And necessities, the consumption is mostly affected by what? By the lower income group. So it is not fair. So when we do the taxation, of course, you want to be efficient, okay? You want to be efficient. That means you want to minimize the excess burden. But at the same time, you will have to look at the justice, okay? The fairness. Is it equitable? All right. So, for example, if I tax rice highly, that means I'm not being fair to my voters, to my to the consumers. So, in the next election, I will surely be thrown away into the ocean. Okay, I will lose the election. So we have to look at the equity concept as well. So now you have what? I have the efficiency, and then you have the equity, and they are not necessarily consistent with each other. Okay, efficiency, you just minimize the excess burden, you tax inelastic good high. Now, equity, you have to look at distribution of income, you have to look at which group are affected by the tax, which are, of course, the lower income group. So therefore, you have to what? You have to balance up. Okay? You have to balance up. Now, when you do balance up, that means you have to exercise your judgment. Okay? Your judgment based on what? Based on efficiency and what? Concept of justice. Okay? Or if you look at rice, the demand is inelastic. We don't actually tax. What do? We give subsidy. Okay? So instead of taxing, you give what? You give subsidy. So therefore, that is what? That is the balancing up of the issues of efficiency and
Equity.
Okay. Any question? Any comment? Okay. All right. So I'm going to show you the one study based on this. This study is being done on Pakistan. All right. This is not a new study. Being based or being done many years ago, 1997. Okay. Price reform, Pakistan. Application of what we just learned today. Now, in Pakistan, they want to do some reform on taxation. They call it price reform. Because the government is paying subsidy and also collecting taxes. All right. So if you look at the background, the study done by Deaton, the government was paying subsidy for wheat and rice and collecting taxes on oil and fat. So these are the four goods. And elasticities are summarized here. Okay. Wheat, rice, oil, and fat. Now you look at the price elasticity. Okay, the price elasticity. And then you look at the current policy. Okay, current policy, wheat, rice, subsidized. Oil, fat, negative subsidy means tax. Okay, so negative subsidy means the tax. Tax is 5%. Now you look at the price elasticity. So you don't worry about the other part. All right, you just worry about the two columns. Okay, I want you to look at the two columns. You relate the elasticity, the price elasticity of demand, and then you relate the current policy. Okay, number one, is it based on efficiency rule?
No,
Why not?
because price inelastic.
Because the wheat demand is very inelastic. Okay, the wheat demand is very inelastic. The elastic demand is just negative 0.64. Okay, and then you have rice elastic. Okay, relatively elastic. And then you look at the oil and fat, it is elastic. But if you look at wheat, the demand is very elastic, but it's not taxed, it's subsidized. Okay, rice, the rice is elastic. It's also subsidized. Now, if we go by the tax, efficiency tax rule, what should we do to the wheat and rice? Should be taxed, right? Should be taxed.
Yes,
Which one you tax higher?
should be wheat.
Should be wheat, okay? Wheat should be taxed higher. Rice should be taxed lower. And of course, oil and fat should be taxed. So oil and fat, okay, good, because you are taxed 5%. So if you go by the efficiency rule, let's say the rice you tax maybe 4%, okay? Because it's less elastic than the rice, than the fat and oil. So rice probably you tax 4%. Now what about wheat? Relatively, what should be the tax on wheat? Higher or lower than the tax on rice?
Should be higher.
Should be higher. Okay, should be higher. Okay, so that is efficiency rule. Now, you look at Pakistan. What is the main staple food for Pakistan?
Wheat.
Wheat. Okay, so Pakistan's staple food is wheat. So what the government is doing, but rice is not. Okay, rice is not staple. Because I don't think people in Pakistan, dia makan juga nasi biryani. So both you can say staple lah, but wheat is more staple than rice. So the current government policy is what? Instead of tax, they give subsidy. So in terms of equity, okay, in terms of equity, probably they are doing the right thing. Okay, but the subsidy is too much, 40%, 40%. Okay, all right. So now, what that study is suggesting, okay, what the new change based on the elasticities and the current policy. I think this is the one they suggest. Okay, what do they suggest? They suggest reduce subsidy, and here reduce the tax. Okay, and then welfare gain, small, large. Then what happened? If I include the distributional concern, that means the equity concern, all right? Then this is the new policy change or the new policy recommendation. So based on what is happening now, all right, that study suggests reduce subsidy on wheat. So maybe instead of 40%, because inelastic demand, tax high. Okay, but since it is a necessity, so what they suggest, reduce subsidy. Instead of 40%, maybe 20%. Okay, now rice also reduce subsidy. Maybe to also 15%, okay, to 15%. All right, and then here use tax. So this is the suggestion. Okay, But if you look at the equity concern, okay, if you look at the equity concern, wheat is a staple food for Pakistan. All right. So what do? We don't reduce the subsidy because it's a staple food. Now, rice is not that staple. Okay, rice may be a second or third staple food. So reduce subsidy, okay, maybe not as much, you know. For the fat and oil, so I can reduce that. But here, you know, when you look at the equity perspective, the good which is very inelastic in demand, and it is a staple basic need, you don't reduce the subsidy. Okay, because of what? Because it is equitable. It is an equity perspective that we should do. So we have to balance up, all right? So here you have to balance up with the efficiency criteria. So efficiency criteria, you balance up with what? With the equity criteria. Okay, so that is what one study, you know, being done on Pakistan. So the subsidy generate overconsumption of wheat and rice, efficiency loss in for rice. The tax also generate dead weight loss. Dead weight loss ni excess burden lah. All right. So the suggestion to minimize the excess burden. Okay, that was what they suggested. All right. And then you also need to look at the equitable perspective or distributional consideration. So what they decide not to decrease the wheat subsidy based on equity ground, but rice is not so staple, so it is okay, all right, to reduce the subsidy. And then oil and fat is also used, you know, by the people for cooking more heavily by the lower income group. So we reduce the tax. So that is the outcome when you look at the equitable perspective, you balance up with the efficiency criteria. Okay, so when you look at the equitable, the justice, sometimes, you know, you have to balance up. Sometimes, you know, we have to look at more weight on the equity side rather than the efficiency rule. But again, you have to have also be practical. You know, how much money should we spend on this type of good? Because it costs the government a lot of money. So that's why I said, you know, it's subjective. This is a very subjective issue. We cannot say, you know, how do you balance up? Right? How do you balance up? So the balancing up is very subjective, on you. Okay, you make your own judgment based on maybe a few other criteria as well. All right. Okay. Okay. Any question? All right.
Sure.
Yeah.
Equitable ni doesn't affect graph
Equitable tak ada graph. Equitable tak ada graph. Sebab apa? Because you know what? It's based on what? Based
Judgment.
on judgment, based on value. So when value, we cannot graph it. Okay, because when you do the graphing efficiency, okay, you can do the graph because you can see, you can relate elasticity with excess burden. But for equity, you are going to do the opposite. Okay, you're going to do the opposite. Even though you the good with inelastic demand will give you a lower excess burden, but you don't tax that highly. Why? Because of the equity factor. Because the good is a necessity. So we cannot draw a diagram. Because when you draw diagram, you are contradicting yourself. Okay.
Okay, sir.
So that is equity, okay, justice. There is no diagram. We just make argument based on the distribution of income. The low income group, they spend higher percentage of their income on basic needs. So if you tax basic needs highly, then will be extra burden on them. So maybe they have to spend 100% of their income on food, okay, on basic needs. So that make them worse off, okay. So we have to move away from that principle in order for us to be fair. Okay, all right. So this is the chapter. That's the end of the chapter. All right. So we are done with that chapter. I would like you to do homework question. Okay, homework question. I want you to do question problem number 1. Okay, I want you to know. You know what? I'm going to give you a bonus homework. Okay, bonus homework. I want you to do it now. All right, bonus homework. I want to do it now. This is individual because I know many people didn't do very well on the homework. All right, because you practice doing the homework, and then when I discuss, you only know how to do it. Now I give you a bonus. Okay, for doing those homework problems badly, I give you a bonus. So this is like equitable. I'm not going to base solely on efficiency criteria. I'm going also to base on what? On fairness, on equity. You did some effort, so now I give you some subsidy. So that's a bonus homework. I want you to do the problem chapter 11 now. Okay, we take another 15 minutes. Okay, so chapter number 11, problem 1. Okay, you write your name, metric number, and I will post the homework on the classroom, and then you submit immediately after class. Okay. Now that question on homework, on the problem, the demand, the tax, okay, the tax on liquor. Everybody has that question? To make sure everybody has the same question. Question is as per 11th edition. So you look at 11th edition. Anybody has problem? Any question? Okay, jangan bertanya soalan, buat aja sekarang. Okay, do it now. I give you 15 minutes.
Sir, do we need to do in group or individual?
Individual lah. Ni belah tulis ni. Nampak individual.
Okay, sir. Thank you.
Tanya. Okay, individual. Write your name, metric number. Okay. Bonus homework ni. I will guide you. Okay, I will guide you so that you will get the mark. Okay, first we do the what? We do the graphic and the algebraic to show the impact of tax. So firstly, ni sama je soalan dia. Okay. Question similar to excelity ke subsidy similar. So number 1, A. Okay, I want you to do A. You do the competitive equilibrium. That means before the tax. Okay, before that. Now what you do, I want you to rewrite the function P equal to whatever. So that is the demand function. Okay, apply what you want into P equal to whatever in terms of Q. So what you do, P as a function of Q. All right, don't use Q as a function of P because that does not follow. So you do that, get the commutative equilibrium. Okay, solve it. After you get the, I want everybody to solve. Okay, you finish solving, whether it is right or wrong doesn't matter. You finish your work, let me know. We'll do the second part. Okay, do it quickly. Okay, you got the equilibrium. So for the demand, okay, for demand, what do you get? What do you get? You show the work, show the work. I just give you the final form. Q over 20,000 minus, simplify that, 25, betul tak? 25. 500,000 divided by 20,000. 50 divided by 2, 25. And then for the supply, it should be Q, senang, Q over 30,000. So you equate equilibrium. Okay, for equilibrium, what? Unequal supply. Okay. Then what do you get? Anybody get the answer yet?
Sir,
Yeah.
for the demand function, shouldn't Q be negative?
Q be negative. No, Q tak negative.
Because demand is
Yeah.
downward sloping.
You're right. Q should be negative. Yang 25 to positive. That's correct. So you should have plus 25 minus Q. Betul. Okay. Yeah, you're correct. Thank you. So you got that thing. Now you do the equilibrium. What do you get? Q equal to apa? Anybody get it yet?
Q 300,000.
Q 300,000.
Yes.
Okay, everybody get 300,000. Okay, P berapa dapat?
P 10.
10. Okay, so whatever you are doing, whatever you get, okay, you stop there. If you got it wrong, it's okay. If you got it wrong, then you write down beside your answer, Q is 300,000, P is equal to 10. It's okay. You're wrong. It's okay. I want you to now to finish up. You get 300,000, P equal to 10. Now, another person, is there anybody else get the same answer? Ni nak verify ni. Sebab dia jawapan dia tak semestinya betul. Kalau dia salah, betul ke tak betul? One more person to verify. Betul.
Yes, sir.
All right, good. So, stop for this part. If you got it wrong, you just write beside it, Q equal to 300,000, P equal to 10. You go home afterwards, finish it up. Okay, now we go to the second part, part B. Okay, now part B, what is it? The tax is imposed. Tax equal to T is equal to what? Equal to 1. Okay, equal to 1. Now, as you recall, you impose this tax on whom? On the seller. Okay, if you look at this thing here, is seller. So we do mostly, okay, from our discussion, seller. So you tax on the firms, right? Therefore, the marginal cost will shift or supply, okay, supply shift, okay, by the amount of the tax. Is that right? So if you look at the principle, the MC after tax, we equal to what? Equal to MC plus T.
Plus tax.
Plus the
T.
tax. Okay. MC is of course the supply function, or supply plus T. All right. So what you do, you add the marginal cost of the supply function that you got from the competitive equilibrium, campur sebiji, campur satu, add 1 to the tax. Okay, do it now. Demand function doesn't change. Okay. So now you find equilibrium using the new demand function. I'm sorry, the new marginal cost with the tax. Senang, S equal to T, that means MC plus 1. And tax is equal to 1. So you put in the marginal cost. Okay, you got it? You got the equilibrium? So that will be equal to property. Equal to negative Q plus. So there will be negative Q over 20,000. Okay, plus 25. That is the original supply function plus 1. Okay, equal Negative Q over 20,000 plus 20. So that is the only difference. All right, demand function don't change. Okay, so demand remain the same. So for equilibrium, after that, okay, then what is the condition? MCT equal to demand. All right, this new demand function, okay, that new demand function, you equate to the demand. Now, like I said, every day, every time, we must have the condition. Okay, so write down the condition. If you have not written it, write it down now. So, anybody has worked out the equilibrium? What do you get?
So supply tu memang boleh jadi demand eh?
Mana boleh? Supply
Tak yang
supply.
negatif Q over 20,000 tambah 25 lepas tu tambah 1.
Itu the new, that is the supply after tax.
That one
Oh.
demand function, sir.
Demand function don't change. Huh? What?
Yang sebuah atas screen tu, itu demand function tambah 1.
You're right. You dapat kalut eh. That's good. That means you are doing it the right thing. So, saya salah. Okay, so if you follow me, salah lah jawab dia. Bukannya demand. I thought that was the supply function. So, kita buat salah. So, it should be what? Should be the supply. Supply meaning Q
Over 30,000.
Q over 30,000. Plus one. Alright, so tak payah buat bracket lah. Sebab ada satu term je. Okay, alright, good. Okay, so you equate with the marginal cost after the tax, alright, which is what we got here, equal to the demand. Okay, now, anybody got the answer yet? What do you got? Belum dapat lagi? Belum dapat buat.
$288,000.
Betul?
288,000.
288,000. So Q is equal to 288,000. Okay. The price?
10.6.
10.6. Okay, everybody got it? So what you do, you equate that thing, you can bring the Q to one side. So you can do this, 30,000, or you can do any other way. Plus Q over 20,000 equal 24. Okay, because plus one you bring to the left become negative. Negative Q you bring to the other side becomes positive. So you factor out, okay, 20, 30 and 30 and 20, so that will be 60,000. So you the multiple of 60,000. So you multiply both sides by 60,000. Then you can solve it. Right? So you multiply both sides by what? By 60,000. Then we take care of the fraction. So what you get? Anybody get the same thing? Anybody get different?
Yes, sir.
Okay, good. So that is correct. All right. So that is correct. So now, that is not the end of the story. Okay, that's not the end of the story. What we need to look at is what is the firm price and what is the consumer's price. So I draw the diagram. Okay, so you draw the diagram. I have the demand function going that way, the supply function, MC, and then the MCP. All right, the tax is here, 1 ringgit, $1. Okay, equal to the tax. And you found the competitive equilibrium for the E0. Here is 300,000. In thousands. Okay, and then here 10. Now, when we use the supply function with the tax, our equilibrium is, we call it E1, all right, or you can call it ET. So you got 288. So we are consistent. Due to the tax, quantity reduced. Now the price is 10.6. Now you look at the demand and the new supply function. So that price is the price what? The price consumers. So equate that to PC. Okay, that is the price consumers pay. Okay, so 10.6, what you get is the price consumers pay. So you write there, the P is equal to 10.6, that is PC. Or you can write price consumers pay. Okay, now what is the price firms receive? That is it, that's the price. What is that price?
9.6.
9.6. Okay, you don't have to calculate anything. It's just simple. T is equal to what? T is equal to PC minus P0 plus P0 minus PF. Okay, so PC minus P0 is 0.6. All right, so you have 0.6. This is 1 plus P0 minus PF. Okay, salah. P0 minus PF, that is equal to PC minus PF. You know, we can do it. You can take out the P0, and that PC is 0.6. Okay, equal to minus PF. So from here, what is PF? PF is 1 minus 0.6. So that is 0.4. So the tax share is 0.4 to the firm. So no. Ini tak betul ni. Betul lah, tapi it doesn't follow. So you know, you do it equal to T. Betul lah saya buat ni tadi. T equal to 0.6 plus P0 plus PF. Okay, so this is equal to 1 minus 0.6 equal to P0 minus PF. That is equal to what? 0.4. So P0 minus PF, 0.4. Here, 0.6. So 1 ringgit. So 1 ringgit, what is PC? What is PF? PF is 9.6. So PF is equal to, you can get it from here, all right? So you got 10 minus 0.4. So 10 minus 0.4 equal to 9.6. Or you can do it on the graph, okay? All right. Or you can do it right away from here. 1 equal to PC minus PF, okay? We know PC, which is 10.6. So 10.6 minus PF. So therefore, what? PF is equal to 9.6. Okay? So there are a few ways of doing it. All right. So what you can do here, you say that, okay? You say that you describe the price consumer pay is 10.6. The price firms get is 9.6. Okay? The quantity exchange after the tax is reduced to 288,000 from 300,000. And then, okay, finally, you look at the incidence of the tax, the burden of the tax. Okay, last part, C, incidence of the tax. Now, what is the incidence of the tax on the firms? So instead of the tax, you look at the incidence on the firms, sellers, and then you look at the incidence of the tax or the burden of the tax on whom? On consumers. So the incidence of the tax on the consumers is 60 cents or 60 cents. The incidence of the tax on the firms is 40 cents. All right. So that is the burden of the tax. All right. Okay. Right. So you do that somewhere there. And then last part, the excess burden is equal to what? It's equal to half T times delta Q. Okay, compute that. So you will get some number. Okay, all right. Is equal to half multiplied by 1 multiplied by 288,000 minus 300,000. You get a negative number. Okay, negative value means excess burden, excess burden. So you will get the value, whatever the value is. Okay. Now you did A to D. Okay, and you draw the diagram. Because I draw the diagram, you draw the diagram. So make sure you draw the diagram, okay, like what I'm doing here, because I want to show everything. So you draw the diagram, everything is there. Doesn't matter whether you got it right or you got it wrong. If you got it wrong, afterwards you go home, before you go to sleep, you make your correction. You give yourself 10 marks, because I don't have to grade, okay? I just look at your marks, I will record down the marks. So that is 10 marks. So what you get is 10 marks out of 10. Okay, everybody will get 10 marks. So that is your bonus for the homework. Okay. Everybody done? All right, good.
Done.
So now you submit now. Okay, don't. If you submit late, I'm not going to accept. I'm going to accept now, as it is. Okay, as it is. It doesn't matter whether it's right or wrong. Like I said, if you got it wrong, you write the correct answer on the side, go home, do the correction. So now you submit classroom. I already assigned the homework. Okay, homework number 4. That is the bonus homework. I already what do you call it? Upload. I already assigned the homework in classroom. So you submit classroom. Okay, so submit now. If you 5 minutes to submit, if you submit late, takkan nak buat late kan, benda ni bukan nak buat correction dah. So you submit now, give yourself 10 points. Now this 10 point, you write on the first page, top, so that I can see right away. Okay, top of the first page, beside your name. Janganlah tulis dekat belakang, susah saya nak tengok. Okay, just write it beside your name on the top of the first page, so that I can record cepat. Okay, any question?
Write the marks.
Bukan write, tulis. Write the mark.
Tulis marks.
Tulis mark. Okay. Alright, so submit now. Yeah.
Dekat Google Classroom tu, saya buat pukul 10.35, so dia jadi missing.
Tak apa. Hah? Ya ke? Dia tak miss, dia late je. Dia tak missing. You can
So
submit.
jadi lambat.
Dia akan late. Tak apa. Saya adjust time. Oh, you tak apa. Saya adjust time. Macam mana nak adjust time pula ni? Okay, classroom. Kita edit sikit. So now is 10:40. So I will adjust the time to 10:45, 10:50 lah. Okay, so now I adjust the time. Dah hilang lah, dia tak missing lah. Okay, so you can submit now. Okay, I already change the time to 10:50. Ni, submit je whatever you have, alright? Wrong or right, tak apa. You get 10 marks. Okay, alright. So I will see you again on Monday. Okay, Monday class.
Sir.
Yeah.
I am submitting it now.
Yeah, submit now. Okay, submit now.
Okay.
This homework you submit now. On Monday, okay, our class on Monday would be face to face. And then on Wednesday, we have online. And then I still have to make up one class. All right, so probably next Friday, we have another class, makeup. So that makeup class will be also online. Okay? All right, so that is, because next week, our last week, and next week, our final week, betul tak? Final exam kita bila? I checked with the department, but they haven't informed me yet. When is our final exam?
30 sir.
30.
Pukul 9 rasanya.
Oh, banyak time tu. Okey. 30 bulan 6. Pukul berapa?
2:30.
Dah, 2:30.
Oh, 2:30.
Good. So we have the exam. Banyak masa. You have almost 2 weeks to study. Alright, so that's good. They give us a late final. Okay, so Monday kita buat face to face. Wednesday and Friday next week we'll do it online. Okay.
So Wednesday and Monday online, face to face.
Tak. Monday je face to face.
Okay.
Wednesday to last class we'll do it online.
Sir,
Yeah.
yang homework saya letak tu saya letak due 9.50. Supposedly 10.50.
Oh, ya ke? 10.50. Sebab 9.50 pula. Tunggu sekejap. Tak apalah, you handle in late. So okay lah. Tak apalah, I will not consider it as late. Macam mana pula nak ajar? Okay, saya ajar balik. Saya buat 9.40 ke? Betul lah, saya buat 9.50 pula dah. Dia sepatutnya 10:50. Bagus betul. Alright, okay lah, saya dah tukar time.
Sir, I have submitted. Can you see my?
Yeah. If you submit, everybody submitted already. Okay. Now those people who come, alright. If you have submitted, then I got yours. Okay. Right. So submit now. Okay. So I will see you again Monday.
Right,
Assalamualaikum warahmatullahi
Waalaikumsalam.
wabarakatuh.
Thank you, sir.
All right. Thank you.
Thank you, sir. Good night.
Okay. Good night.